Hey guys, what is going on? Welcome back to my Robinhood portfolio. Hope you guys had an awesome holiday break. What I thought I'd do today is talk a little bit about investment strategies for the end of the year, and one of those being tax loss harvesting. So as you guys know, at the end of the year, taxes need to be paid on ordinary income, and in the same fashion, taxes are also paid on dividend payments received throughout the year as well as capital gains that one may have accrued in their portfolio. I won't go into too much deal about this. I did put out a couple of videos last week about both capital gains and dividend payments, how those are taxed, either short term or long term, depending on how long a security or stock has been held. Again, I won't go into detail about that. Suffice it to say, taxes need to be paid on these particular investments, both the capital gains as well as the dividends. But one strategy to make sort of an indirect investment return is done by doing some tax loss harvesting. So, for example, let's say on a particular position you have $100 invested, and that stock or security went down by 10%. So now you have $90. Well, what you can do is before the end of the year, go ahead and sell that stock off, lock in that 10% loss, and then take that $90 and invest in a different stock. And I'll tell you why that's so. You can't go ahead and buy back the same stock because of some limitations on this strategy. So essentially, you still have $90 invested, but now you have a 10% loss locked in, and that 10% can now be used to offset some ordinary income throughout the year, up to $3,000. But that can also offset some other types of income as well. So you basically made an indirect gain there by locking in that 10%, keeping your market exposure the same. So you still have $90 invested before and after the sale, but now you have that 10% or $10 loss locked in, and you can use that to offset. And you can imagine if that was $100,000, now you have $10,000 that you can offset, or if that was $1 million, now you have $100,000 that you can offset. So there's some very real tax savings there, which basically equate to indirect returns on a portfolio. So I hope that made sense. So there's a very real advantage of doing this. So I have Pfizer up here. I brought this stock up because, as I mentioned in a few other videos, I bought this when it was a very high price. Actually, at its absolute zenith. I think it's a 52-week high, or 52-week high is $37.39. I actually bought this right at $37. So you can see here in the middle, I have a $197 loss for this particular stock. So utilizing this tax loss harvesting strategy, I could go ahead and sell this stock off. I'll basically have a $198 loss on this, just kind of rounding off here. And that can be now used to offset some ordinary income and some other investment returns throughout the year. I did bring up that one caveat is that you can't simply sell a stock and then buy it right back. Basically, there's a rule put in place, a wash sale rule, basically saying that you can't go ahead and sell a stock and buy it right back because they don't want you to basically take advantage of this rule and then buy the same stock back. And it also extends to similar assets. So they have, I don't know if there's a score associated with it, but the IRS takes a very close look at correlation between the stocks that you sold and the stocks that you bought back. So that from that prior example, that $90 example, you had $100 invested, it lost 10%, now you have $90 invested. For example, in my portfolio here, if I had that $90 invested in Pfizer here, I couldn't simply sell Pfizer and then buy Pfizer right back. I also couldn't go ahead and sell Pfizer and then buy back another stock like Merck, for example, a similar large cap pharmaceutical company. I'd have to buy something that's completely different or does not have a correlation at all with the stock that's sold. If that makes sense. It's basically a way that the IRS tries to discourage people from, making this a complete, what's a good term for this? To take advantage of the particular rule, I guess you would say. That's kind of what the tax professionals do, but I guess the IRS put this rule in place to kind of limit some of this activity. Although the whole point of the tax loss harvesting is to do exactly what the IRS doesn't want done. So I'm not quite sure why that's in place. If any investor has a little bit more information about that, let me know. This wash sale rule, I'm not exactly sure the intent behind that. I understand there's a very real tax benefit of doing that. That's what the whole reason I brought this up. But I'm not sure why they have that wash sale rule in place. If anybody out there has a little bit more understanding about this, please let me know. From what I understand, it simply is prohibiting a taxpayer from claiming a loss on a sale or trade of a security and then buying back the same security or a security that essentially is considered substantially the same as the stock that was sold. But in any case, some of you guys can comment on that. But I think this strategy is a great strategy, especially if an investor has substantial losses. Go ahead and lock those in, get those tax benefits at the end of the year, offsetting tax by those losses, and your market exposure simply stays the same. Again, you have to kind of divert your funds into securities that aren't identical or don't have a substantial correlation with the stocks that you sold. But at some later point, I think you could probably sell those stocks off and buy back the stocks that you originally had. I think there's a 30-day rule on that, limit on that. So, yeah, just kind of wanted to talk a little bit about this particular strategy. I think it's a cool little strategy. It's a little bit more complex than what I elaborated here. The idea is, a pretty easy idea. Tax loss harvesting. You sell off a security that you have a loss on. That loss can offset other either income tax, like I said, up to $3,000, or other gains you made throughout the year. So that neat little strategy. I think I might do that. Not necessarily for Pfizer here. I'm going to keep this long. I like this stock, but there's a couple other stocks in my portfolio that have lost a little bit of money. But again, my portfolio isn't huge by any means, so this might just be a lot of buying and selling and a lot of sophisticated trading for very little gain. So I don't know if I'm going to be doing it this year, but definitely as my portfolio grows, I'm going to be considering doing this in the future. So yeah, I just wanted to talk a little bit about tax loss harvesting. If any more seasoned investors can kind of shed some light on that washout sale rule and or anything that might not have been completely accurate in my description, please let me know. Again, I'm learning. Always enjoy feedback, so if you guys can help me out with that, I would appreciate that. So yeah, I'll kind of end video here with that. As always, if you enjoy my videos, feel free to like, share, and subscribe if you're so inclined. Like I mentioned, I'm a new investor, learning about the markets. Any advice that you could give, any clarification on not only this rule, the washout sale rule, but anything in general, let me know. Any good stock plays out there, let me know. Let me know what you guys are doing with your portfolios. It's very cool to hear what other investors are doing. So kind of with that, I'll end the video, and we'll see you guys tomorrow.